and I think brought a lot of great value add. So there's still a lot up in the air, but I want to give Dennis the platform and where he's going to talk a little bit about the CARES Act and the what he knows about it. As far as everybody that I've known and spoken with, he seems to be the most knowledgeable person about this. So again, I just ask everybody who maybe just recently joined to please keep your phones on mute. If I hear a couple things in the background, I might politely remind everybody to keep their phones on mute. So with that said, Dennis, I appreciate you taking the time, and the floor is yours.
Thank you, Tyler. Very appreciative of allowing me to speak. And thank you all for joining in. It's been quite a challenging tax season thus far. But the main thing I want to get across is I just hope that everybody's safe and healthy, and their families are safe and healthy, and everybody's practicing good hygiene habits. There's nothing more valuable than your health. I know this phone call is about money, but it comes in a faraway second place to everyone's health. So that being said, thank you, Tyler, again, and your team at Biltmore Capital. I've been working with Biltmore Capital, Tyler, for a while now. Their team is great. We have several common clients. I had common clients with Tyler before I even knew Tyler. So I can highly recommend his firm. He is very hands-on, as he said, very in tune with everything. So, again, thank you to Biltmore Capital. So a little bit about my firm. We've been on top of this, informing all of our small business clients since before the Senate even passed the law originally that went back to the House. So when the Senate the bill was on the floor at the Senate, before the House even had a chance to vote on it, we were trying to stay on top of it as much as we can and keep our clients informed. We have strong connections with banks and lenders and are receiving information literally as they receive it. So, I mean, through our experience and our history with lending institutions and bankers, we have developed a very close relationship with them. So we're very fortunate in that regard. I just want to say, if any of you don't have banking relationships or aren't considered one of their, and I'm going to use quotes, loyal customers, because that's what they used, we can help and we can assist and help you find a lender. I mean, that's not what we necessarily do, but we do have contacts there. We can put you in place with somebody that may be able to help you maybe a little bit more if you don't have a banking relationship or if you're not considered one of the higher profile clients of those banks. So Tyler has all of my information. If you want to contact him after this phone call, that would be fine. You know, he has certainly my permission to pass along my information. Once this actually gets finalized, banks are going to be completely overwhelmed with applications. So, and it was supposed to go live 12:01 last night, but banks still are receiving directives and guidance, and it's still an unknown. It's still hitting a moving target. So everything I tell you today at 11:12 a.m., that's what's true as of 11:12 a.m. today. So I'm doing my best. I've gotten updates this morning. Things have changed, so I'll do my best to keep you apprised of all of the current law as it stands now.
And Dennis, I just want to talk to that. This is Tyler. I was logging on at 12:01 with my bookkeeper, with my 80-year-old bookkeeper, who stayed up to help me through the process, and they didn't have it live. We finally got a link from Bank of America this morning, and they told us that you had to have a corporate credit card, as they made a policy that you had to have a corporate credit card to apply through Bank of America, and we don't have a corporate credit card with them. So after talking with Bank of America for a week, every other day about this, we can't use Bank of America. So if any of you out there were planning on using Bank of America, know that you have to have a business checking account and a corporate credit card, or they will not allow you to use it. So again, please, everybody, keep your phones on mute. We can hear people coughing, and hopefully you don't have coronavirus, and also dogs barking in the background. So please keep your phones on mute. Dennis, go ahead.
All right, thank you, Tyler. So as I was saying with the changes, so even last night, the SBA department, Small Business Administration Department, it was responsible for these loans. They made two changes, pretty significant changes. I think they're significant, but at least they impact certain businesses. We received this information simultaneously. As the banks were receiving it, we were receiving it. So again, we are very, very much apprised and in tune with what's going on, fortunately for us, and fortunately for our clients. They are now not allowed, I'm going to touch base on all this later, but they're not allowing independent contractors to count in the formula for computing average monthly payroll costs. Again, I'll explain what that is. This is a change from 24 hours ago, so it's still a moving target. The other thing they did is they capped this non-forgivable piece of the loan at a 2-year loan subject to a 1% interest rate. So again, two things have changed just literally since I've gotten 24 hours ago. So keep in mind that there's moving parts. A little background on me. I'm a CPA. Tyler touched on a little bit. With over 26 years of experience, I was with a firm right out of college for over 24 years. I was a partner there for 15 years. 2 years ago, I got the opportunity to join Lear & Pennypacker, and I must say it's honestly one of the best decisions of my life. I've met so many more people in a slightly larger firm. We're about 50 people versus a firm of about 15 people where I was a partner. So it's given me a lot of resources that I didn't have before, including what I've just mentioned in the last 5 minutes speaking. So my only real regret is that I didn't do it sooner. So I joined here. I've been here 2 years. Met great folks like Tyler and his team. So I've been involved in startups, but my specialty here is tax, and my specialty within tax is closely held businesses and high net worth individuals. So although it's tax season, we've been consumed with the CARES Act and how it affects our clients. Go ahead.
Oh, go ahead. That wasn't me. Everybody, okay. Please keep your phones on mute. Thank you.
So Tyler and I spoke, as he mentioned, last week, and I was reaching out individually to each business client of mine. It took quite some time, but I believe it's the best approach, one-on-one. I'm doing my best to stay on top of it. We are doing it here. We have over 2,000 small business clients within our firm, and it's for a small firm, we do a little bit of everything, and that's a very large size for a firm this size to have over 2,000 just businesses, not counting individuals, which we do as well, but just businesses. So we've been trying to stay in touch and trying to keep the personal service touch that we have with our clients. So it's been quite exciting. So anyway, Tyler asked me to speak on this, specifically the Paychecks Protection Program, also known as the PPP loan. This is one of the loan programs issued by the SBA, the Small Business Administration. A lot of acronyms flying around here. So this has been the most popular form because if you meet eligibility requirements and use the proceeds of the loans, according to the SBA's there is forgiveness in the following 8 weeks after closing. So there is an opportunity there that you can have your expenses, and I'll touch on all of that, what qualifies, later in the broadcast. But I just want to let you know that some of this loan or all of this loan can be forgiven. So in essence, they're funding 2 months of your expenses so that you keep your employees hired during these times and keep them away from the unemployment line. So how it's going to be paid back, that's a discussion for another day. But that's above my pay grade, quite honestly, so at this point. I don't know what many of you know or heard. There's a lot of rumors and stuff flying around there. I've heard them too. But I'm going to keep this more on the basic side. I will make myself available for more complex questions. Again, Tyler has my information. If you wanted to reach out to him to reach out to me, that's fine. But please keep in mind that, as I mentioned, we have over 2,000 small businesses, and they're in the same boat as you. So if I don't get back to you right away or I have someone else on my team respond, please understand. I'll do my best. You'll get the right answer. It might not come from me, but you'll get the right answer. We have an entire team here, and we're all in tune with the same thing. We have meetings 3 times a day on this and the latest updates. I have one scheduled at 4 o'clock again today. So a little bit of background on the CARES. they allocated $350 billion with a B to assist small businesses to keep businesses operating and to keep workers employed amidst this pandemic that everybody obviously is aware of. So it's expanding the SBA 7A loan program for that PPP loan, as I mentioned. So it's increasing loan amounts and the expanded allowable use provisions and possible loan forgiveness, as I touched on and will touch on later. It's 100% federally guaranteed loans to small businesses, so the banks are not at risk and the lenders are not at risk. SBA loans are backed 100% entirely by the government, so banks are not necessarily at risk in issuing these loans. They have their due diligence requirements, as always, but SBA loans are different than just a bank loan, a typical bank loan. The application deadline for this, as it stands now, is June 30th, 2020. That's not to say you should wait. It's basically a first come, first serve, wild, wild west type of thing. Once that money is run out, I can only tell you what they say now is the money is run out. Do I believe they'll increase their lending capacity? Yes, but that is not authoritative. That is not anything that I will swear to. But again, I wouldn't wait. I wouldn't wait, and that's kind of why we've been on top of our clients, for almost 10 days now, as far as getting your ducks in a row, getting what you need in order to apply for the loan, and being, first in line, whatever that constitutes. But getting that money into your hands rather than somebody else when maybe you file later on down the road or apply later on down the road, it might not be there. So eligibility for CARES Act, it's for small businesses with fewer than 500 employees. So you're not considered small business and eligible for this loan forgiveness program if you have over 500 employees. Employee count, you'll hear that term. That includes all employees, full-time, part-time, any other status, hourly. They all count as employees. A not-for-profit as well, certain not-for-profits, I should say, 501c3s are eligible for this loan forgiveness. Not all of the nonprofits, but that's a little bit outside the scope of this discussion. So anybody who operates as a sole proprietor or as an independent contractor, for instance, a real estate individual, they would qualify in order for loan forgiveness. There are certain different eligibility requirements for those because most real estate agents don't have W-2 people on their payroll, so they will look to a net income for the 12-month period. So any individual who's self-employed who regularly carries on a trade or business. So again, if you're receiving a 1099 and reporting either on a Schedule C on your individual income tax return, you're eligible for this as well, even though you don't have payroll. Important to remember. Food and services sector, the 500 employees rule is applied per location, but again, that's probably outside the scope of this discussion, so just wanted to touch on it a little bit. So the parameters here, the loan amount that you are eligible for is 2.5 times the average total monthly payroll costs during the 1-year period before the loan is made. Now, I'm going to say that with a caveat because we have just heard about an hour ago that they may be looking toward 2019 payroll, whereas it would be a much more simplistic process where you just send them W-2s as an employer, and the banks would use that to verify your loan qualifications. So I don't know what they're using yet. I can only tell you what has been in discussions. It's either going to be a 12-month rolling period from the date of the loan closing. What we've been advising clients is as of get your payroll records by employee by April 1st, 2019 through March 31st, 2020. That's what we've been instructing our clients all along. They've broken down by employee, so that's important too. So the maximum loan amount you qualify for is $10 million. So even if you do this formula and your average monthly payroll costs exceed $10 million, it's capped at $10 million. I don't think that's going to come into play for a lot of people, even our businesses here. We do have a business that is eligible for $4 million, believe it or not. So we have some higher profile clients here too as well. So, but anyway, cap is $10 million. Again, I don't think that's really going to be made applicable too much. So let's see what else. Seasonal employees count too. So there's a different formula for them. But again, that's not necessarily how it's going to work. So average payroll, the way it's going to work is you're going to take your payroll for that period that I just mentioned, 4/1/19 through 3/31/20 by employee. Anybody who makes over $100,000 is capped at $100,000. What that means is if you have a key employee making $150,000, they're capped at 100, okay, for salary purposes. You're going to add up all of those costs. You are going to divide by 12 to get your average monthly cost, and then you're going to multiply that by 2.5. That's a statutory number, 2.5, in order to come up with the available loan that you would qualify for. So that's kind of where the starting point is. So your starting point is to accumulate your payroll records, figure out your monthly average cost. Again, I'm going to go into what defines payroll, and then trying to do that formula divided by 12 times 2.5. Some of the things not required by a lender, so you're going to have proof, okay? So lenders have a responsibility, their due diligence, as I touched on. So the employer has to be in business before February 15, 2020, so you can't start a business as of March 31st and say you're eligible for a payroll. That doesn't count. Good faith certification from a borrower that uncertain economic conditions due to COVID-19 make the loan necessary to support ongoing operations. I don't know how anybody is faced with certain economic conditions under these current environment that we live in. I think everything is uncertain, whether it's you're going to stay in business and that's probably an extreme, or you're just going to be receiving payments later because your customers are paying later, or you may have to lay people off. They don't define what uncertain economic conditions, but again, I can't see how anybody wouldn't be eligible under that. Loan proceeds will be used to retain workers and maintain payroll, make mortgage, lease, and utility payments, and rent. Certain other obligations in place prior to 2/15. So that's what the loan proceeds are specifically meant to cover. How they'll police that, again, that's going to be addressed further down the road. No other application pending nor has received loans for any other type of disaster recovery loans or economic stabilization loans under a COVID-19 stimulus package. That's been changed a little bit, slightly. So what they originally said is if you qualify for another SBA program called an EIDL, you are not eligible to have both, but they are allowing the EIDL loans to roll into the PPP loans, and therefore you'd still qualify. Again, moving target, but the PPP loan is the loan forgiveness one. That's really what it's geared toward, this conversation. Independent contractors, if you are a sole proprietor and you file a Schedule C and you're self-employed, lenders will be looking for payroll tax filings, Form 1099 miscellaneous, the fact that you received a 1099 from certain employers, and income and expenses from the sole proprietorship. Items not required by a lender, this is very atypical from a bank's perspective, is there are no personal guarantees on these loans. So you don't have to put up your house or your second home or anything like that. No personal guarantees, which is big. No collateral, as I mentioned. No requirement to show that you can repay this loan. You don't have to prove that you'll have the funds in 6 months from now in order to be able to cover your debt service on the loan. So pretty interesting. So again, it's it's a little wild out there as far as that goes, and who's going to be able to get this loan and then have the ability to pay it back if it's not forgiven. So the loan uses, as I kind of mentioned, it's geared toward payroll, keeping employees on the payroll. That's the main gist of this. They don't want, you having to lay off employees and then funding the unemployment line. So the government is willing to cover your expenses for the next 8 weeks from the date of the loan closing. Covers rent, health benefits, insurance premiums, utilities, interest on other debts or mortgages. Those are the reasons for the loan proceeds. So you don't have to prove it, but that's what it's geared toward. That's what the loan proceeds are supposed to be used for. Applications, again, this is so ambiguous as far as what banks require and what different banks require as far as documentation for eligibility for the loan. So it's kind of on a bank by bank basis. Hopefully you have a banking relationship, but as I said, if you don't, I can put you in contact with somebody. They're going to ask for payroll costs, employee salaries, interest on mortgage obligations, anything that's going to that was in place before February 15th. So if you had a lease agreement and you rent your office space, that has to be in place by February 15th. You can't run out and sign a lease now. So that's just important to know. So getting into the more specific items, what is included in average monthly payroll costs? This is defined as salary, wages, or other similar compensation. Again, that's by employee, and that's capped at $100,000. So basically your W-2, anything that's a W-2. They came out originally, as of yesterday, 1099s. If you issued 1099s, they were included in payroll costs. They are now not included. I just read the directives from the SBA to bank lenders. That came out last night, and 1099s are excluded. That was one of the changes. So it's strictly payroll right now as far as eligibility for that. Cash tips or equivalent, payments for vacation, parental, family, medical, or sick leave, separation pay, they're all included. Those issues that are, things that I just said. Payments required for the provisions of group health care benefits, including insurance premiums. They are included in monthly costs. So also, payment of any retirement benefits, the employer matching side of a 401k, or a cash balance plan that an employer might have in place. They count. And as we understand it, that employee might be capped at $100,000 from his gross pay, but his health insurance premiums are added to that. So, and his retirement plan contributions, employer contributions are added to that number. So if somebody's making $100,000 and their health care benefits are $15,000 and their retirement matching is $5,000, that's $120,000 is what you're going to use as your base to calculate your monthly average payroll costs. So that's pretty significant. The other thing, too, is payment of state or local assessed on the compensation of the employee. So a lot of states have state unemployment and disability. It's not a rather large number, but that's added, too, as well. So you're looking at gross wages plus health plus retirement plus state and local taxes, not withholdings, taxes that the employer is taxed at. So excluded, specifically excluded from payroll costs, as I just mentioned, 1099s. That's new. Payroll costs in excess of the annual salary of $100,000. So I mentioned that to you as well, too. Payroll taxes are not added back. Railroad retirement taxes and income taxes, they're not calculated in the computation of your monthly average payroll cost. Payroll costs of an employee whose principal place of residence is outside the U.S. So this is a domestic plan. So they're not looking to fund outside employees for that. Qualified sick leave wages for which a credit is allowed under Section 7001 of the Families First Corona Response Act, and they are excluded from payroll costs. And qualified family leave wages, they're also excluded from payroll costs. So again, it basically, not to oversimplify it, it's gross payroll capped at 100 plus health plus retirement plus state unemployment and disability, in a nutshell. Once that happens, that loan proceeds and you receive your loan, borrowers are eligible to have a portion of their loan, portion or all of their loans forgiven. Here's a big thing. The forgiven debt is not recognized as income for income tax purposes. So typically, cancellation of debt is income to the recipient. However, in this particular case, these loan proceeds, if they are forgiven, they are not taxable to you. So it's a tax-free loan that is forgiven. It's a pretty big thing as far as this act goes. The borrower is entitled, what constitutes loan forgiveness? How does it qualify? The borrower is entitled to loan forgiveness for the amount spent on the following items during the 8-week period beginning on the day the loan was originated. So if you closed on a loan April 5th, you have 8 weeks from that date in order to pay the following costs: your payroll costs, which would be your salaries, your interest on a mortgage obligation if you happen to own your building and you have debt on that building, the interest, not the principal and interest, the interest part is calculated and part of that will be forgiven. The rent on a business lease, now that I mentioned the lease has to originate before February 15, 2020, same with the mortgage. The rent is part of the forgiveness program. Utility payments. For services that began before February 15th, and the utility costs are pretty broad. So it's, heat, water, electric, cable is, I've seen, considered utility. So I don't think it's going to be a major issue to cover those expenses in that 8-week period from your loan proceeds. I personally don't. But again, it's not an all or nothing thing too. So the forgiveness could be reduced, but it's not an all or nothing thing. So if you don't get a $100,000 loan and you don't use $100,000 for those items that I mentioned, only a portion would be roll into a loan, and most of it would be part of the loan forgiveness program at that point. So loan forgiveness may be reduced based on the reduction of employee headcount or employee wages. So the idea behind the CARES Act is not to necessarily have your employees and then go ahead and turn around and lay them off or reduce their salaries. Part of the loan forgiveness then becomes a formula in order for how much of the loan becomes forgivable and how much of the loan is still an outstanding loan at the end of that 8-week period. So again, there's a lot of intricacies in and out of that, so it's a little bit more specific than for this particular call. So reductions in headcount or wages that occur during the period beginning February 15th and ending 30 days after the start of the CARES Act will not reduce the amount of the loan forgiveness if by June 30th, 2020, the borrower eliminates the headcount reduction or wages reduction. So if you lay off and hire, that's the idea behind it in a nutshell. That's what they're talking about. So if you happen to have laid off, you have the opportunity to rehire those people, and then it doesn't count against your loan forgiveness portion. So potentially a forgivable amount, $1 million, the average monthly employment of 100 people from that time period, February 15th to June 30th. If it was reduced from 100 to 75, just as an example, the forgivable amount is $750,000 for simple math. So that's kind of how that would work. So they're not looking for you to. The idea is to keep people hired and employed during this time of crisis. So they're not looking for you to reduce your payroll expenses by firing them and still qualifying for that forgivable loan. That's not the idea behind it. The loan proceeds, again, I want to interest that are forgivable are not taxable. So again, that's a big thing. If you qualify for a $100,000 loan, and you use those proceeds to cover the costs that I mentioned, and that is not taxable to the recipient. So that's and then basically a gift of $100,000 from the federal. Applying for loan forgiveness at the time, it's a little premature, but I'll just touch on some of it. It allows borrowers seeking forgiveness must file an application with the lender. That's not determined yet. I'm guessing sometime after the 8-week period. I can't see how it would be before that. But again, that's my opinion. That has not been determined. But there'll be an application to file, and you'd have to prove what you used the loan proceeds for. How you prove that has not been defined yet. So that's kind of a, cross that bridge when we come to it type of thing. Decision on the forgiveness by the bank must be within 60 days after the lender receives the completed application. So that's basically a burden on the banks or the lenders or the brokers, whoever you're going through to receive these SBA loans. Documentation would be IRS payroll tax filings, state income payroll and unemployment insurance filing, canceled checks for utilities, rents, transcripts of account, other documents, whatever it is, verifying rent, mortgage interest, and rent payments. It's really to be determined as far as that documentation. But again, that's down the road. Right now, we want to just get that loan in place. That's the general idea behind it. So one of the things that did change, it was originally a 10-year loan. The portion that was not forgivable, it was originally a 10-year loan. That's changed as of last night to a 2-year loan for the non-forgivable portion, and it's a 2-year loan at 1% interest rate. So again, originally it was a 10-year loan. That's changed for now. Could change back. I don't know. But 2 years at 1%. There is no prepayment penalty either, so that's another big thing. So if you do have that loan and you don't qualify for forgiveness, or a portion of that doesn't qualify for forgiveness, you could pay it off, and there's no prepayment penalty. Again, no personal guarantees, no collateral. So that's a big thing to me. There's no prepayment penalty. So if you're short on cash flow and all of a sudden you get some cash flow in, you could turn around, pay off that loan, and there's no penalties associated with that. The SBA is going to be issuing guidance all along to these lenders, all the way up until last night when they were supposed to put this in place as of 12:01 today. No banks really are in place. If any banks are saying they're in place, I don't believe it. I don't believe the loans are in place yet. They're still receiving directions. So I guess they'll certainly start to become online through a portal system. It's not going to be as easy as walking down to the local branch and talking to a lender there, because I think it's going to be a mess. This is just us talking. I don't know how many people are on the line, but you can imagine how many small businesses are out there. If this 50-man firm has 2,000 small businesses, I can't imagine the number that's out there for that. There's probably information on that too. So there's loans from affiliates. So if you have two affiliated companies under common control, you only qualify for one loan. So not each individual company under common control would qualify for two different loans. So that's pretty much it on the PPP loan side of things. There is an EIDL, as I mentioned, loan. That provides up to a $2 million per borrower. So you might qualify, or you will qualify most likely for more if you went that route. They are issuing a $10,000 grant within 3 days. If you apply for the EIDL, whether you're accepted or denied, they are issuing you a $10,000 grant. By grant, I mean free money. So that's not to be paid back. That's just basically a crisis gift. It's paid within 3 days after completing that loan application to the SBA. That's for the EIDL loan, separate from the PPP loan. Again, the eligibility is very similar to that. There is no forgiveness piece of that. So it's a true loan. The requiring limitations are reduced. There's still no personal guarantees, still no collateral. But it's a loan. It's a true loan, so there's no forgivable piece of that other than the $10,000 that I mentioned. So that's capped at $2 million. Other than that, I think I've covered a lot. I'm sure I haven't covered everything. I'm sure you probably have more questions now than you did before you got on this phone call. I'm available Tyler's available. Tyler's team, my team. Again, you just have to please be patient with that. So we are dealing with, I'm just getting email after email. I don't even get the tax work anymore because of this, because it's so important to businesses. We want them to stay in business. The government wants them to stay in business. And that's the idea behind it. Fortunately, the government did extend tax season filings till July 15th. Most of the states have followed, so that's very fortunate for my profession and for me particularly, because it allows me to get some sleep at night. So I'm going to kick it back to Tyler now.
Yeah, guys. Again, I know there was a lot. That's why we had to change this conference bridge number. There was a lot more people interested than what we originally had anticipated. So I'm sure there is a lot of questions, and I don't have a very organized way of doing this since everybody's sitting on mute. But maybe we will just take a few questions to start with, and like I said, we can always circle back. We have a long time to potentially apply for this, and there's still a lot up in the air. But if somebody wants to come on and ask a question, please feel free. We'll sit here another 10 minutes or so.
I just have hello.
Yep. This is Joe Beal, and I have a question. Do corporate profit sharing contributions count also?
Yes, they do. The employer side, they count towards your payroll, monthly average payroll.
Right.
Yes, they do.
Okay.
Yeah. Hi, Tyler. This is Linda Siegel. I just have a quick question. I have employees, but I file a Schedule C. I'm an attorney. I don't have the Schedule C up to $100,000 for 2019, so I have to use 2018. Obviously, I didn't file yet.
They will not be looking for 2018, in my opinion. I think that's going too far back in time. So they're going to ask you for. If you keep, just for instance, if you keep your books on QuickBooks, they'll ask you for a P&L profit and loss from that period.
Okay, so you think that will qualify? Because obviously I didn't file taxes yet for 2019.
I do. Yep, I do.
Okay,
yep.
QuickBooks. Okay.
One quick question.
This is
Diane Vance. Can I ask a question?
Go ahead.
Can I? Okay. I was looking at this, and it seems that you have to prove that your income has reduced because of the COVID-19. If your income has not reduced, can you still apply for this loan?
Yes, you can. Yes, you can. They use the term uncertain economic conditions. You don't have to prove that your income was reduced. In fact, some of our businesses are not even going to go ahead and apply for that loan because their business hasn't been impacted, although I do tell them that, it's economic uncertainty, and I think that affects everybody. There's no way it doesn't, so I hope that answered your question.
I have I use ADP for payroll, and ADP is producing a report that shows they deduct the federal withholding from the gross, and they deduct your FICA and Medicare from the gross, and your net reportable cost of payroll is just the gross minus federal plus the SUI and state minus the FICA and Medicare, and that's the cost that they're using.
I understand. I'm glad you brought that up, and I'm very familiar with ADP because most of our clients use ADP. Very familiar with that. It is unclear. There's a lot of ambiguity, and I meant to touch on that, so I'm really glad you did ask that question. Right now, we are not we're not subtracting out federal withholding as it stands now in our calculations because I really, again, my opinion really cares to Congress, obviously doesn't, but I don't see how that's fair as far as backing that out. It makes no sense, and Social Security and Medicare are not backed out, so I understand. I've seen to ADP a dozen times. I just don't like that report, and I've been telling our clients, and we've been telling our clients here at Lear and Pennypacker to start with your gross wages, and then add in, cap it at 100, as I mentioned, add in your health, add in your retirement plan contributions, and add in your state unemployment disability. Very familiar with what you're saying. It's very ambiguous. They're also talking about the federal withholding from just a certain time period. So not necessarily from February 15th to March 31st. So how does that come into play? I don't know.
Okay. All right. Thank you very much.
You're welcome.
How about a question for landlords?
Go ahead.
What about a single proprietor, a landlord that is not getting rent payments from their building tenants?
Okay, so sole proprietor, you're filing a Schedule C or E, I assume.
E, yes, E.
Yep, on your 1040. So what you would have to do is prove that that's your business, which is quite easy to do. It's a trade or business that even files a Schedule E. You're going to use a 12-month period that shows your net income to you that falls to the bottom line, and you're going to compute your monthly average costs off of that number. Again, that hasn't been addressed specifically in all of the laws that I've read, and I've actually read the bill.
Does that exclude depreciation and all the other expenses?
I would absolutely. So again, it's going to be a report that you generate. So I would not factor in depreciation for sure. That's a non-cash expense. Typically reduces your
and then
rental.
long-term payments on HVAC and roofs that you're depreciating over time.
Yeah. So if you bought an HVAC and you're depreciating that, that doesn't show on your profit and loss if we're excluding depreciation anywhere. So you're better off capitalizing those costs to show more of a profitability for the last 12-month period.
Yeah. All right. Very good. Thank you.
Okay.
All right, a couple more. Love this stuff. Nobody else.
Me too, Tyler.
Oh, no, I do have a question.
All right, ma'am, I heard you get in a couple times, so go ahead.
Two quick questions. So the payroll taxes, then, we should just put in what our employer taxes are, basically, right? Because you can't weed out all that stuff. Is that what you were saying earlier?
Well, no, I'm not saying your employer, FICA and Medicare. I'm starting with gross wages. If you're speaking specifically to the ADP report, yes, I would add in. I would not subtract from your gross wages Social Security and Medicare. The only thing you can add in is state and local unemployment and disability.
Okay, and one last question. I am a physician, and sometimes, to be honest, I don't pay myself all the time. How would that work?
Are you a sole proprietor, single member LLC?
A PL, a single member. Well, a sole proprietor, I guess, is what I would be.
Do you file a separate tax return for your business, or do you file it as part of your individual income tax return?
S corp.
Oh, you're an S corp. Okay, fine. So you don't pay yourself a salary. So it's only really not distributions don't count coming out of an S corporation. It's got to be true salary.
Okay.
Sorry.
Yeah, well.
Others?
Well, just one more quick question. How hard?
Go ahead, ma'am. Why don't you finish off your question first?
Quickly. I tried Bank of America also. No good. I mean, I had an account there for 30 years. It has to be a special kind of account. They're giving me a really hard time. And I'm a good customer. How hard is it going to be to find another bank? That's my only banking relationship. I have a great relationship with them, and they're absolutely, telling me forget it.
What I would suggest is you probably, another bank is not going to push you to the front of the line, too, because they're dealing with their loyal customers. Again, that's their word, not mine. But I think what you would do at that point is you might enlist a broker in order to do that, to expedite things. I do have somebody that we work with here. If you wanted to request or send Tyler an email, send it to me with that question.
I'm a client of Tyler, so we'll give him a call. Maybe
give him a call, and then I could pass along that information to you, or
with the
Tyler
broker, right?
Directly to you.
I mean, I've had an account with them for 30 years. It's like complete, and I'm a really good customer. It's completely ridiculous.
Gotta love big banks.
I know,
right?
I know. We keep hundreds of thousands of dollars there. It's crazy.
Yeah. Right.
Gotta love big banks.
Okay, we'll contact Tyler afterward. Thank you.
Thank you.
Yep, you're welcome.
For a business that's unsure if they're going to hit a financial hardship, by applying for the PPP program, that excludes that organization from tax credits of other programs. Is it the advice to hold out and wait for the tax program to get kind of sorted out, see what they look like, and do a comparison between now and the 20th of June?
Good question. Good question. Yes, you are correct in what you said. It disqualifies you from other programs. That's a case-by-case basis. That is not a clear-cut slam dunk. You should do it this way, not that way. That's a case-by-case basis.
Roger that.
So hold off and kind of see what the ups and downs are, then play there.
But let me interject again. With that, it's a first come, first serve, and if they don't, if all the money is gone and spent, and you don't qualify, and they don't increase that, if you wait till June 30th, you might be SOL at that point.
What does that mean, Dennis?
Shit out of luck.
I know. Good question, Tom. Anything else? We got another 5 minutes.
What is the interest on an EIDL loan?
I want to say it's 2%, but let me just see.
And if you pay it off early, there's no penalties on that?
I apologize. EIDL loans are at a 3.75%, so I apologize. It's a 30-year repayment term. It's not 2%. It's 3.75%. There are no prepayment penalties, though. No, absolutely not.
Okay.
All right.
I'm a single member LLC. So how would and I don't get a W-2, how do I address the payroll cost?
Well, as a single member LLC, you're filing a Schedule C on your individual income tax return. You're going to look for that 12-month profit and loss statement that I mentioned earlier in order to produce your net income, in order to see how much you qualify. So your payroll, I understand you don't get a W-2. Your payroll is what your net income is from your Schedule C business. So that's what they're going to use as a guideline.
Okay.
Others? Is that it? Going once, going twice?
Thank
All right.
you.
Thanks, guys.
Yeah, guys, thank you. Again, email. I know he was talking about me. We're all, all the advisors here at Biltmore have been on the call and are ready to help, clients in any way they can. So feel free to reach out if you need anything, and be safe, and have a great weekend. Thank you, Dennis.
Thank you.
Thanks, guys. Thanks, Tyler.
Thank you very much. Thank you.
Thank you.
Bye-bye.
Bye-bye.